Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome to the show. My name is Al Gordon, and as always, I'm working on your financial freedom. And I'll tell you what, I'm helping out the federal government because I finished all of my taxes earlier this week, and I was lucky enough to write a reasonably big check to the IRS. Yeah, I wrote them actually, I didn't write them a check. I gave them access to my bank account and gave them authorization to take the money out. Yeah. So you're probably thinking, wait a minute, Al. Hold on, Al. Wait, time out, Al. You're the guy that's always talking about how all of this real estate is tax friendly, that you pay the least amount of taxes of any group of taxed individuals or entities in the nation because the nation's laws favor real estate investors. Yes, that is true. Oh, come on, Al. Come on, Al. I know what you're thinking, right? You're thinking, come on, Al. How the heck does a guy like you pay money to the IRS? Well, it's simple. Because I did my taxes, and my taxes indicated that I owed the IRS some money. And you're thinking to yourself, so everything that you've been telling us on the radio, it's all lies. No, I am not the federal government. I am not here to blow smoke up your chimney. I'm not here to say, look over here while I do something over there. That ain't me. Let me explain myself. Okay, I paid money to the federal government. I did. I had to allow them access to that bank account so that they could take out their share of the proceeds that I have earned by being a successful real estate investor. Yeah. You know what? At the end of the day, just because I benefit from some of the most, lenient tax laws out there, maybe that's the best way to describe them. Lenient? Yeah. Just because I benefit from some of the most lenient tax laws doesn't insulate me from paying taxes. It doesn't. Well, wait a minute, Al. You say when you do real estate correctly, you pay little or no taxes. And that is true. And trust me, I have done real estate correctly. So you're probably wondering, so why are you paying taxes? Well, I have an income problem. Yeah, you heard me correctly. I've got an income problem. And now you're thinking, oh, here comes the smarty guy. He's going to say, I made too much money. Okay, there's a little bit of truth in that, but that's not really the income problem I'm talking about. The income problem that I'm talking about are these entries on my 1040. I'm looking at them right now. These entries that have to do with earned income. You heard me correctly. Earned income. In other words, income that is derived by doing something for other people. Or maybe you're a beneficiary, like I am, of a couple of retirement plans. So when those retirement checks come in, they're taxed just like W-2 income. Just as if I were going to work every day trading time for money, I am taxed the exact same way. Because those pensions were derived from me doing just that, trading time for money. That's how I earned the pensions. Yeah, I qualified for the pensions. And the government says, that's fine, you can have your pension, but we're going to tax you like you're working anyway. So that creates for me a tax problem. It does. Because my real estate isn't big enough yet to alleviate the tax problem that I've created for myself by having earned income. Yeah. So let me just break it down for you. About half of my income comes from sources that are deemed to be earned. In other words, my pensions, Lifestyles Unlimited throws me a couple dollars every once in a while because I do the radio show for them. Okay, trust me, I don't make my money doing radio. I don't. If you look at what people in the radio industry get paid, it ain't crazy six-figure salaries, okay? It ain't even crazy five-figure salaries, right? And my producer is shaking his head up and down right now going, yeah, you go, Al, you go, Al. Okay, so at the end of the day, half of my income comes from these earned sources. The other half of my income comes from real estate investments. You heard me correctly, from real estate investments. Now, a big chunk of my income this year came from something called capital gains. In other words, Tina and I made some decisions to sell some real estate. And the real estate that we sold were all the apartment communities that we had invested in our first 4 years as members of Lifestyles Unlimited. When those properties sold, we were the recipients of the capital gains that came from the sale of those properties. We made a significant amount of money in the form of capital gains. We did. We made a lot of money. So I think the best way to articulate to you how this tax thing works is this. Half of my income that I reported to the IRS came from earned sources, and they get taxed heavier, stronger, meaner. I don't know. How do you describe taxation other than the burden that it is, right? So half of my income gets taxed as earned income. The rest of my income gets taxed as capital gains. So you're probably wondering, well, what is your effective tax rate, Al? What are you actually paying in effective tax rate? Well, according to my tax software program, my effective tax rate worked out to be 12.38%. You heard me correctly, 12.38%. But when you look at the capital gains, when you look at what I was taxed at on the gains that I made in real estate, the tax liability on that is like less than 10%. Okay, when we come back from the break, I'll try and break this down for you because it's complex. I get it. Stick around.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. Now, let's get back to your map to financial freedom.
Welcome back to the show. All right, so we're going to talk about this tax breakdown. First of all, some of you are going, wait a minute, you only paid an effective tax rate of 12.38%? Yeah, it's true. I'm a little bit embarrassed that number is so large. I am a little bit embarrassed that number is above 10%. I am. And some of you are thinking, dude, I wish I could be like in that range. Because I know some of you have just filed your taxes recently, and you're looking at what, H&R Block or TurboTax or Liberty Tax or whoever did your taxes, maybe you did them yourself. You're looking at the documentation that they provided to you. And on the first page, they usually tell you what your effective tax rate was. And a lot of you are looking at effective tax rates a lot higher than mine. I will tell you this. If I had earned all of the income that I earned in 2021 as earned income, not passive income or not capital gains, mind you, but if I had earned that money as earned income, my taxes would be a whole lot higher. A whole lot higher. See, one of the things that's benefiting me and keeping my tax rate like at around a 9% rate based on my investments is due to the fact that my investments benefit from something called depreciation. They also benefit from the ability for me to pay my taxes on gains that I make in the form of capital gains taxes, which are normally lower than ordinary tax rates. Effectively, capital gains rates they're up there, right? They're higher than what I paid. But if you just do a simple math methodology, it indicates to me that I'm paying more in taxes on my earned income than I am on my passive income and my capital gains. And this sets me up for the future. It totally sets me up for the future. Because what I'm doing now is I am weaning away from everything that requires my time, with the exception of doing this radio show. I am weaning away from everything that requires my time. And it's beautiful because I no longer am working 40, 50, 60 hours a week in a job. I no longer have to work for somebody who may or may not understand what I bring to the table. I no longer have to work in an organization whose moral compass does not align with my own. I no longer have to be the burden of work in my life. Yeah, I am no longer the burden of work in my life. It's all gone. As a matter of fact, this tax return that I'm looking at, I'm not going to tell you how much money I made. Some of you have already done the mental math and you got an idea of how much I made. Okay, it's all good. Okay, let me just give you an idea. I make enough money to qualify as an accredited investor. Okay, so that might, some of you that understand the rules for what it takes to be classified as an accredited investor, that gives you an idea of at least how much money I'm making. Okay, so for the rest of you, it's north of $250,000. Okay, it's just north of there. That represents probably the biggest income I have ever received, except for the one year back in 2005, when I had spent 2 years working on a real estate development deal. We were putting together a subdivision. It was supposed to be, I can't even remember. It's 199 homes, and I think when we got everything all platted out, it was worked out to be 197 homes because I had to give up 2 lots for a ponding basin. This was a subdivision that we designed in Fresno, California, and we wound up selling it to a home builder who in turn resold it to KB Homes. I made a lot of money that year, and that was the one year that I made the most money ever. The most money ever. And it had to do with one real estate deal. And as I was trying to get back into those real estate deals, I was starting to realize that the market was becoming a little bit difficult. Because when this period was like 2006, 2007. And normally it's going to take a year, 2 years, maybe 3 years to actually lay out a good subdivision, get it through the entitlement process, and get things moving. And that was kind of the modality that I was working on. By the way, that's a very risky endeavor. And I know this to be a very risky endeavor because I actually had moved forward on my second subdivision. I was doing a small 8-home custom home subdivision on a 10-acre parcel of land. Everybody was going to have at least an acre of land. It was in a beautiful part of West Sacramento, California. We had gotten all the entitlement done. We had gotten everything ready to go, and it was 2008, and I started to realize that the market was disintegrating. And I shuttered that deal. But I didn't shutter that deal before I had already spent $100,000 getting that deal up and running. Only to realize that that deal was going to go nowhere because the real estate market was going south. You heard me correctly. I have never made as much money as I did in 2005 when I filed my taxes until this year. Now, I did not make as much money in 2021 on real estate as I did in 2005. But let me break down some of the differences for you. First of all, the risk, heavily mitigated. I very, very low risk for me in the assets that I invest in. And part of the reason the risk is so low is that I fully understand the real estate markets. I fully understand the investing model that I'm working with. I fully understand the assets that I was investing in. And as those assets continued to move through their production life cycle, or whatever you want to call it, I received financial reports that I reviewed and I compared to the prospectus, and I made determinations as to whether or not these investments were on track. And if they were off track, well, I contacted the lead investor that I was invested with, and I go, hey, man, what's going on with this? And they would tell me what's going on with that. And if I was satisfied with the answer, I'd be cool. But if I wasn't satisfied with the answer, I would press a little bit more. And I would say things like, okay, what's your game plan to get this back on track? And I'd say things like, okay, what's your game plan to get that back on track? Because this is the neat thing about Lifestyles Unlimited. You're not dealing with a bunch of people that are like, hey, I got a bunch of money. Will you take my money and invest it for me? No, you're dealing with people that know what the heck they're doing with the real estate business. It's a total game changer. Okay, taxes. I know, taxes. All right, we come back from the break. I'm going to tell you some more stuff about taxes. Are you sick of them yet? I am.
Warning, listening to the Lifestyles Unlimited Real Estate Investor Radio Show will change your life. We will teach you how to create wealth and passive income so you can be financially free. And now, back to your host.
Welcome back to the show. All right, so I'm looking at my tax documents here, and boy, I'll tell you, it's kind of interesting. You know, I did find on the adjusted gross income, yeah, I'm up there in the upper numbers. Let's just call it the upper numbers. I guess I could let the cat out of the bag earlier, didn't I? Okay, so it's at least $250,000. Let's just leave it at that. Now, my total tax that I paid for 2021 that I literally had taken out of my bank account last Monday was $29,729, so almost $30,000. And if I assess that half of my income earned me a certain tax rate, and then the other half of my income earned me a different tax rate, I can start to assess where I'm at from an effective tax rate. I know, I just blew your head up, didn't I? Sorry, bro. I didn't mean to do that to you. All right, let me explain myself. My effective tax rate was 12.38%. My effective tax rate would be lower if I didn't have as much earned income as I do. See, some of my income comes in the form of passive income. It comes from the cash flows developed by the apartments and the single-family homes that I own and operate. Oh, I don't operate the apartments. Somebody else does that for me. But the single-family houses I own and operate, oh, wait a minute. I kind of don't do that anymore because I sold almost all of it. Well, I sold them all except for one. The point is this. My investing strategy, since I became a member of Lifestyles Unlimited almost 5 years ago, was to get myself to a place of financial freedom, meaning I would have enough income coming in that it would meet or exceed my bills. And in doing so, I would be investing in assets that would also contribute equity growth to what I am doing. In other words, the assets would go up in value. They would create additional revenue streams for me at a future date, either in the form of a sale or in the form of a cash out refinance. Now, in my case, with all the apartments we were in, all of them sold. Every single one of them sold. And what that did for me was that provided me a very nice capital gain payment. Now, that capital gains payment is subject to taxes. And there are things that I can do with my I'm not going to turn this into a tax class. I don't want to talk deep on taxes. I don't. Here's the part I want you to get. My tax rate would be lower if the majority of my income came from passive sources and from capital gains. That's it. End of story. End of story. Because when I take a look at what I actually paid in taxes based on the investments, my numbers are much lower. What blows this number up is that earned income. And see, this is what the government loves. The government loves you working. Yeah, they want you working. You realize this, right? It is more advantageous for the government to have you employed in a job, trading time for money so that they can tax you at whatever the ordinary tax rates are, than to have you be like me and not actually work and make a good portion of your money by not working. And in areas where they can't tax me a lot. Yeah, I'm kind of like a deadbeat. I think the federal government thinks I'm a deadbeat. And I'm okay with that. They can think whatever they want about me. Hey, I just paid them a very healthy amount of money that I know for a fact they're going to squander. I just know it in my heart. The federal government will not do as effective of a job with that $30,000 in taxes that I paid in 2021 as I would be with it. Oh, what would I do? That's a good point. Well, I'd probably just buy another piece of real estate with it. That's what I would do. If I didn't have to give that money to Uncle Sugar, I would have just gone out and bought myself probably another single family house. Now, to be honest with you, there are some multifamily deals that I could get into. Most of the lead investors that I coordinate with, they want $50,000 per investment. Some want $100,000. Some want a little bit more. There are others that'll do 25. And I know a lot of these guys personally because I've met them. I've had an opportunity to meet with them. And chances are, if I had that $25,000, I could probably just go to one of these guys that are producing deals and say, hey, I only got 25. Can you let me in? You know what? They might do it. They might not, but they might. Think about it. So what would that $30,000 do for me? Well, it would actually do a lot for me than giving it to the government. Yeah. See, when I give money to the government, I really, in my heart's heart, I believe that the government is going to spend that money on things that are going to benefit myself, my family, my community, and my nation. And in theory, that's how the government is organized. It tries to do that stuff. But politics get involved. Politicians pay more attention to being elected and maintaining power than they do with taking care of me, my family, my community, and my nation. Yeah, there you go. That's my impression of our government. Yeah. But I will tell you in the same breath, I wouldn't trade my government for any other government on this planet. Guaranteed, we got the best one. It's flawed, but it's best of the best. Trust me. So I have no desires to overthrow this government. I have no desire to abuse this government, but I will criticize this government because this government deserves criticism. And as an American, I have the First Amendment, and I can criticize at will. Unlike other countries around the globe where if I were to, make a comment about the supreme leader, I might find myself in a gulag in Siberia. Now think about that for a minute. But let's get back to these taxes. Okay. I don't really care that I pay taxes. You know why? Because it's representative to me of the fact that I made a lot of money this year. You heard me correctly. I made a lot of money this year. I didn't do a whole lot to make all of that money. No, I didn't. And that's what I've been trying to tell you, is that this real estate thing, this real estate game, if you will, this real estate thing, it is for real. It is for real. It will change your life. Period. End of story. No further comment needed. But in order for it to change your life, you've got to get educated about how to do it correctly. You have to understand the rights and the wrongs. You have to approach the rights, build on those while avoiding the wrongs. And trust me, there are a ton of wrongs in real estate. Every story that you have heard about a real estate deal gone bad, or a tenant blowing up your house and catching it on fire, or a resident leaving in the middle of the night after trashing the place out. Okay, all of those stories are true. They're actually true. But I don't deal with people that would do that sort of stuff. I don't, because I enter into business relationships with people that have a clue. They also have the financial ability to pay for the housing that they're renting. And I look to find the best of the best that are out there. And trust me, they're everywhere. You just got to know how to find them. Oh, you want to know how to do that? Especially you guys that are struggling finding good residents. I'll tell you what, I'll give you some tips when we come back from the break. Stick around.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. It's time to turn up the volume and fine-tune your passive income plan so you can create the lifestyle you've always wanted.
Welcome back from the show to the show. I can't even talk today. It's because I was filing taxes earlier this week, and I'm still have my April 18th hangover. I do. I've got an April 18th hangover. I'm one of these guys that, all right, I'll just admit it. I wait till the last minute. I really do. I wait till the last minute to do my taxes. And I've always done it this way. I have always done it this way. I don't know why I do it. Well, I do know why I do it this way. Well, let me explain myself. So back in the day when I was serving in the military, you tend to be very, very busy. And tax day shows up. It's traditionally April 15th each year, right? I guess this year it went to April 18th. So we got an extra 3 days. But let me tell you something else that you don't know about April 15th, or actually the day after April 15th. You want to know what happens the day after April 15th? That's my birthday. Yeah, you heard me correctly. That's my birthday. I was born on April 16th, a long time ago. Yeah, I just turned 58. And traditionally, what I would do is I would get my taxes done at the last minute because I was so dang busy. I couldn't carve out any time to do it, and I was too proud to hand them over to somebody else because I'll be honest with you, I do like to understand how all this stuff works. And for me to understand my taxes, it's actually better for me to actually work on my taxes because it forces me to understand certain things in the tax code that maybe I wouldn't necessarily understand otherwise. Yeah, that's the only reason I do it, is it kind of keeps me in touch with the fact that I got to file taxes. So normally what I would do back in the day, it'd be April 15th, I get my taxes done, I drive to the local post office at like 11:30 at night, and I drop off my taxes just before midnight so that they would get that stamp that everything was good. And I did that year after year after year after year. And part of it has to do with the fact that I get into a little bit of analysis paralysis with taxes, because what I do is I stack up all those envelopes that come into my house. I just stack them all up. It says tax documents, stack them all up. And I stare at them. They sit on my desk and I stare at them and I go, is it April 15th yet? And, I blow it off. I kind of blow it off. I do. And part of it has to do with the fact that if I know I'm going to owe taxes, I just soon wait till the very last minute to pay the government. Yeah, I'm not interested in getting my taxes done on January 1st so that if I owe money, so that I wind up paying them on January 1st. I'd rather keep that money in my account at least until April 15th, right? Okay, so that's really how I've always done my taxes. And now that I have all my time to myself, it's even more difficult for me to get up the gumption to work on the taxes, because now I've got all this white space in my life, all this free time in my life to do what I want, when I want, go where I want, blah, 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 right? So the thought of doing taxes, well, that's like a burden. It's like a burden, and then I go, well, maybe I should take my stuff to H&R Block. Tick tock, tick tock. Well, at the end of the day, I waited until April 18th. Yeah, the day taxes were due, to do all of my taxes. Now, I knocked them all out on April 18th. Yeah, I did. I got them all knocked. I got my business taxes done. They were submitted by 6 o'clock that night. And then my federal taxes were submitted, as well as my state reporting taxes, at a couple minutes before midnight. Yeah, I'm a just-in-time guy when it comes to taxes. But you want to know about how do we put great residence in our property? Because that's what I was kind of leading into, and then all of a sudden this tax thing hit me in the face. All right, so how do you find great people to enter into business agreements with you? How do you do that? Well, I think the first thing that you do is you have to let people know that you're out there. You do. You have to let people know that you're out there. And if you're in the business of, let's say, buying single-family assets that are distressed, fixing them up, putting them into service as clean, functional workforce housing, which indicates to me you're a real estate investor as opposed to a real estate flipper, also called a dealer. Oh, by the way, those dealers, oh my goodness, the taxes that those guys pay, wow, crazy. Oh, I got to talk about that because we're talking about taxes, right? So that big chunk of money that I mentioned, I don't know, I got $154,000 in capital gains or whatever I had. If I had earned that as a flipper, I would not be subject to the capital gains rates. As a matter of fact, that amount would be calculated into my earned income rate, which would just blow my tax bracket through the roof. It would blow it through the roof because now all of a sudden I'm showing 6 figures starting with a 2 in front, right? Yeah, you guys that bring that home is a combined household income. You know what your tax bracket is like, right? Crazy high. And those of you who are in Texas are just happy that you're in Texas and not paying state taxes. Although you do pay property taxes if you own your property, right? Okay, so those flippers, though, not only do they pay that tax based on the income being earned, all of it being earned, that portion that they make in the form of gains, short-term capital gains, is considered self-employment work. You heard me correctly. The IRS classifies real estate dealers or flippers as people that are engaged in the day-to-day trade of real estate. The same as somebody that trades used cars. It's no different from a taxation standpoint. The IRS doesn't distinguish between them. As a result of that, you get to pay an extra 15.3% in tax on the gains that you make because those are the self-employment taxes that go along with being a flipper. And trust me, had I earned that money as a flipper, I would have retained a lot less money. Let's just put it that way. Which means I have a whole lot more money that's gone back to work for me. Yeah, I didn't just sell these assets and just sit back on my laurels, counting my money, figuring I'm a fat cat, right? No, you sell these assets, and then you take the money and you go buy more assets. And that's exactly what we've done. It's totally what we've done. But I did tease you and I said, okay, how do we find these good residents? Okay, well, here's the thought that maybe might help you. Screen correctly. Yeah, you heard me correctly. Screen correctly. In other words, have anybody who's interested in renting a property from you or a unit from you, screen them. What should you be looking for? Okay, a couple things. How about a credit report? Yeah, get a credit report. See how they do with credit. What the credit report's going to tell you is whether or not they're capable of making timely payments. You heard me correctly, whether they're making timely payments. If they can't make their payments on time, if they're habitually 30 days late with their payments, it's going to show up on the credit report. And you have to determine whether or not you're willing to wait 30 days to get your rent. Because what that credit report is telling you is that those individuals may not be your highest and best choice for somebody to enter into a business relationship with. Another thing you should do. Oh, let me go back to this credit report thing. Don't focus on the score. Don't focus on the score. No, and here's why. There are people out there that don't have really big credit card scores, but they pay their bills on time. Their credit score isn't high because they probably have more debt than they probably need to have, but they're able to balance it. They're able to manage it. And if they can manage their debt, let's say they've got a 560 credit score, but there's absolutely there's zero 30-day lates on their credit report. That's a win. To me, that's a win. Criminal background checks. You need to do them. And the reason you need to do them is, well, I'll just be honest with you. You don't need somebody that has to be a registered offender moving into your property. Does that make sense? Yeah. I do not want to rent to registered offenders. I make that clear to everybody right up front. If you're a registered offender, no, we're not doing business. The other thing I want to look at is see if you've been arrested. Now, if you smoke back in high school, got a little juvie record or whatever, I don't care about that stuff. If I'm looking at your criminal record and it shows that you've gone to the big house a couple times, probably not going to rent to you. At the end of the day, this real estate stuff is not that hard. Don't make it harder than you think it is. It's really pretty easy. This is the easiest money I've ever made. And if you want to do the same, go to lifestylesunlimitedworkshops.com.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.